You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. David, you're going to be dusting off your crystal ball now. We did a show last week about the highlights of the past year in the precious metals business. Now we're going to get into the area that's probably the riskiest and yet the most exciting. What does the future hold? What do you think is going to happen, perhaps, say, in the gold market?
Well, prefacing this by saying that the obvious, that none of us knows where the future is really going to be, and I don't want to get into the way of predicting specific prices, but I think if we look at trends, continuation of certain trends and the evolution of new ones, I think that might be where we can generate the greatest value for the listeners to get them thinking and so that they can come up with their own decisions. I think several things are going to happen next year that will, first, one of which will be a continuation of the upward trend in the price of gold. I think that gold stocks are going to begin to close that gap that they've had, a very large gap of actually oftentimes 2 standard deviations below what you would expect to be for the price of gold in relationship to the movement of the mining stocks. The better ones, I think, are going to do much better than they have in the last 2 or 3 years. And you know, with 2 standard deviations, there's a 97 or 98% chance that that won't continue. In other words, that you'll move back more to the mean or even overshoot. So I think we're going to see an improvement in the movement upward in the price of good mining stocks vis-a-vis the gold price itself.
And silver, is it going to be following gold, or is it going to set its own trend?
Yes, there are several studies out that show a very high correlation in the overall price of gold, not necessarily day to day, but certainly over weeks and months. There's about an 85 to almost a 90% correlation in the price of gold and silver. So in other words, if gold is trending upward, there's an 85% correlation that silver will also trend upward if you look over a period of weeks and months.
Palladium, platinum, they seem to skip along together as well, although you think one has a bit more potential than the other.
They move to their own dynamics, and my favorite currently of the two is palladium. Even though palladium, is up $150 an ounce or so since we started talking about it earlier this year, and platinum is up too. It's closing its gap with gold. It's still cheaper than gold, which it normally isn't the case. But I think that palladium, because it can be used for so many of the same things that platinum does, offers an interesting perspective for buying into weakness, kind of like silver in relation to gold. It really has a lot going for it, not only in industrial use, but also in investment demand too. So it's certainly something to keep an eye on.
You were mentioning in a past show that the overall supply of gold seems to be drying up. The demand is simply outstripping the physical product. Any bright spots on the horizon for the production of gold in the new year?
Well, there are several new projects coming on stream. There are other large ones that potentially could come on over the next few years. Most of the really mega projects, with very few exceptions, won't be out there for 5, 6, 8, 10 years. There are a few exceptions to that. There's an exception in eastern Canada. There's a couple of exceptions in Mexico. We're definitely going to see more supply coming on stream, but we're also seeing very large increase in demand, not just from central banks, not just from large, high-value individuals, but also across the board where governments are encouraging their citizens to own gold. And I think that's going to continue, and it's going to add more pressure on the supply out there, because even what's coming on stream is it takes more tonnage of ore to get the same grade that was the case 20, 30 years ago.
And with the euro crisis still looming over us all, people are saying perhaps governments everywhere should start putting more gold in the vault to back up their currencies.
Well, that's true, and not all governments are openly encouraging this, because that kind of takes away from their ability to print fiat paper money that isn't backed by anything and have people have confidence in it. But the people, I think, are going to have the last word on this globally, and they're coming to realize what people for thousands of years have realized, that you can't trust paper money to hold its value, but you can trust the metals to do so, and that's going to continue to drive that story and make it bigger and bigger as we move into 2013. You'll notice that two things. Once this morning I noticed in the Financial Times, they reported that Canada sold more Canadian gold maple leafs in November than they have in any month this year. And we talked a couple weeks ago about the U.S. Mint making its comment that they sold more American gold eagles in November than they have in any November for the last 14 years. And to me, that's very, very strong anecdotal evidence that pushes the belief that I have that we will see more interaction between supply and demand in gold in 2013 and moving forward.
Well, you have those places in Japan and Germany where they have vending machines where you can actually go and buy a piece of gold.
Right, and the Chinese banks are now going to be able to trade amongst themselves with gold, which had not been the case before. There's new ETFs coming on stream and new trading vehicles in Hong Kong. So all these things are supportive. And I think as a result of the things we've just discussed over the last few minutes, this will going to lead to more volatility as the market makes up its mind which way it wants to go. You're going to see bigger price rises and bigger price drops. Some of them will mean something, some of them will not. But if you keep your eye on the bigger picture, you can eliminate a lot of that noise and not get shaken out of your position or become too afraid to take it if you see price weakness.
Again, a long-term point of view, much more important than just trying to make a quick profit over a day or a week or a month?
It really is. If you believe in the story of this secular bull market as opposed to a cyclical one, the secular one is global in nature and it's more long-lasting. And nobody knows when this market is going to top out, but my guess is it's several years off. It could happen as early as 2014. It could be 2016 or even later. But the point is, it's got a ways to run, quite a ways in terms of price and time, and the biggest bang is likely to come near the end. So if you can kind of hold on for that with even a modest position, I think can really pay off for you, especially if you're able to buy mining shares and the physical into price weakness.
All the best in the new year, David. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio, and you can contact us at info@HoweStreet.com. I'm Jim Goddard.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.